In the last video, I did mention that all of the four major markets were at resistance points. And today, or yesterday, the markets did move downwards, which respected the resistance. Now, look at the S&P. That was the one market that didn't close to its nearest resistance point. It was kind of in no man's land halfway there. It did touch it, though, and come back down. So it was the weaker one. But I did expect all four markets to be a bit red on Monday, and that's what happened. Now let's go through it very quickly. The S&P, you can see, retraced and closed just around here, 405, 406 on Friday. Today came all the Monday came all the way back down to test this descending line. I actually, you know what, this descending line you can now delete, believe it or not. It's no longer valid. To me, we're going to come all the way back down to the ascending line. The thing is, everything's about Wednesday. So, today's price action, Tuesday, probably continuation because we did close at the low of day. So it'll probably come back down. I don't expect too much of a move down because it's all about Wednesday. Maybe we come all the way back down to sort of low 390s. But yeah, that's the S&P. NASDAQ, yeah, this had a pretty strong close, even popped its head above the horizontal resistance on Friday. That had a minus 2% day. So you can see how resistance really did play a role here. Again, nothing really matters until Wednesday. Wednesday, if the markets go down based on the Fed's decision, then you're going to go all the way back down. And to be honest, if you go all the way back down, you have a triple bottom. They very, very rarely hold. You'll probably flush. Now, I don't expect just a move down and then a flush. There'll be some move down, a little bounce, and then, a test of this low, then a pretty decent bounce, and then a test of the last low, and then probably a flush. It's not all in one go. But the NASDAQ 2% drop despite a very strong close on Friday. That was good. I like to see that. I'm bearish, obviously. So again, it can all reverse. If it just sort of goes sideways today, I do expect it to be red. But if we go sideways today and then the Fed decision is bullish, you've got the perfect cup and handle and a move up. So, it all depends on how the market interprets the Fed, but at least it was a nice red day after touching resistance on Friday. Dow Jones, that was actually the weaker one on the way up. I mean, on the way up, this whole time it's been the stronger one by far. And it still remains the one that's the highest, relative to the others. But, this move up, it was sort of the weaker one. It was lower highs, never piercing the descending. And then yesterday we had, okay, it wasn't the biggest move down, not even 1% down, but still, another one or two down moves and you're back at the lows and the chart looks very weak. So I do expect continuation today. Nothing too crazy because, why would you send the markets down so much before knowing how the Fed, what the Fed will say. So I don't think anyone wants to get too bearish or too bullish pre-Fed announcement, but still nice move down off resistance. Again, this one also was on resistance. They all were on Friday. So that was nice to see. The Russell 2000, that was one of the stronger looking charts. I mean, look at this. We've hit this point 4 times. 1, 2, 3, 4. You could even say 5. So, and there was double resistance. It was not just the horizontal, but the descending, the longer term descending. And we came back down minus 1.4%. Again, I expect a little continuation on the way down, just like all the others, but nothing too much because, again, the market is not going to make a crazy minus 3% move down before a Fed day. I just don't see that. I don't see that happening. But yeah, just a continuation. And again, imagine the Fed is, the chart is perfectly set up for either bullish or bearish interpretation of the news. Let's just look at the Russell, for example. If we go down, we move down to, let's say, 184. Let's just draw this, down to 184. Then all of a sudden, Wednesday comes out, the Fed comes out, announces it's bearish. Okay, we'll go all the way down. And then for the rest of the week, we'll start moving down. And this will look like a perfect resistance did its thing. We come back down and we'll probably bounce. And then the chart is doing its thing again. Like everything is trading within the descending, the channels, all that stuff. And we come back down, bounce, and flush. And that's what happens if the Fed, creates a bearish momentum. Now, if the Fed is bullish, we'll come, sideways. I still think we have a sideways down day, just like all the other markets. And then if it's bullish, we break out essentially. And then, it's a cup and handle. Here's the cup. There's the handle. And then we break out to the next horizontal. Then we retrace, blah, blah, blah. So those are the two scenarios. So it's really how the market interprets the Fed, but still I expect a sideways down move today. Now look at the VIX. The VIX hasn't done this in a while. We've seen days like this, and the VIX is up 3-4%, not even. We've even seen days where the VIX is red despite the markets being red, but a sort of 7-8% day where it doesn't give up all its gains. I mean, that indicates something, but we know what it indicates. It indicates everyone being wrong about the Fed, and they're going to be more hawkish, where they maybe they do 50 basis points again, and they say, guys, we're going to hold rates higher, and people are expecting 25, and so maybe this is the market mispricing. So we could have a nice breakout of this descending line, and it's definitely this descending line is correct. I'm just going to say that I really think a breakout of this, and we go straight back to sort of 23, 24. Yeah, and then ultimately 26. I don't want to say that the VIX is no longer broken because it's been a horrible indicator, and it's just, but still, I've seen moments like this where the VIX is just not working, and then boom, it just really makes up for all of those past weeks of weakness and non-correlation. So just watch out with the VIX. That was nice to see yesterday. Those are the markets. Let's look at rates. They also, this is the old school pattern where you'd see markets down, rates up, dollar up. That's basically what happened yesterday. Now look at the 1 year. We haven't seen clean days like this in a while. You've seen these sort of tails and closes that much lower than where the high was. Yesterday we had nice, and that was after Friday actually, but a nice small close near the high of the last couple of trading days. And I just feel like another move up today, and I do expect a move up today. We can start testing the higher range, which we haven't done in a while, around here, 4.8-ish. And a close round there will be a perfect setup for a Fed, bearish market, bullish yield announcement on Wednesday. And then boom, we break out to, I'm not going to say new highs. We're not going to take out 5, but, 4.8, maybe even 4.9. So watch out with the 1 year. That was interesting. The 2 year, you can see how we've sort of made our little dip here, tested this descending. And now we're starting to curl up a little bit. Now, if we have another move today, maybe a close above the high of the last couple of trading days, so above 4.27, 4.3 maybe, that'll be a good setup for a move all the way back up to 4.5. We just close around here, bam, 4.5 post-Fed. That'll be nice. 5 year, similar, and obviously similar trading pattern. I need to get rid of some of these lines because it's getting noisy again. This one no longer counts. Well, yeah, let's see if we can make a move back up to 3.75-ish around here. Maybe even today, and then a breakout of this descending right with the Fed announcement, and then bam, we go all the way up there. That would be nice. The 10 year, the really important one. Let's see today, maybe a move here would really be the perfect area to just stop before the Fed announcement. That would be descending plus the horizontal here, and then a breakout if we have bullish reaction to the Fed. And obviously you can see my first instinct is to think of a bullish reaction to the Fed. If I'm wrong, obviously we go back down to test the lows and maybe even the ascending support for the 10 year. So, but I mean, that's also obvious, 30 year, same thing, so move up, test the descending before the Fed announcement, and then up we go. Otherwise, down we go. So let's see what happens. Now, that's the US yields. Let's look at the European yields. I did suggest that this would be the first one to crack up, and watch out, they're going up, and they are going up. Europe has problems. There are more reports yesterday. I think several countries, housing market problems, German GDP, all this stuff was coming out, and it's not looking good. It's obvious it's not going to be good. I just think European yields will make new highs very, very imminently. And you can see, I mean, this is a very nice chart pattern. If we just go up a few more days, we're basically testing 2.6 and going to make new highs. So yeah, for me, EU yields will breach, and that will probably drag the US yields up too. So I think we have the old pattern of yields up, markets down coming into play. Let's look at the dollar because that also is coinciding. Look at this. Now it's starting to look a bit clearer. You know, this bounce off this 101.5, the ascending line. Beautiful, beautiful. This is the perfect setup for, you know, obviously a move up to here. Prior support becomes resistance. Maybe a little breach. It overdoes it. People get excited. I do expect this descending to act as resistance. Maybe a little bit of sideways. But to be honest, since we've come down so much, and if this moves up on the news like the Fed, this will probably not be resistance long. It'll probably just go straight up again. And even there, you know, sideways, and because everyone will start jumping in momentum, the shorts will cover. So I feel like a little bit higher of a move in the dollar, and people would just say, okay, let's get out of our shorts. Like, you know, the trend is changing, and this could be pretty violent stuff. I do still think that resistance is strong on the way up, but maybe the immediate resistance that I've drawn here, although it will act as resistance, I think it may even be intraday or just for 1 or 2 days. So I wouldn't get too cute on sort of selling the dollar, or, you know, going long some other FX versus the dollar, or going long gold after the dollar has fizzled out here, because I really think that the move will continue basically. So that's on the Fed announcement being bullish for the dollar, which will be the same as, you know, yields going up, markets going down. If the Fed surprises and the opposite happens, whereby the market goes up and yields and the dollar goes down, I do still expect, by the way, the dollar to go up into the Fed decision even today. But if it goes down, then yeah, we'll test this. We'll basically break right below, and then you can start thinking about $100, and we'll start looking at the next levels. You know, there's quite a few I think you could pick out, but I think 100 would be the first one. Nice psychological number. But yeah, dollar is becoming more and more significant, especially with these beautiful sort of curling formations happening here, just off of 101.5. Beautiful technicals there. Okay, so that's markets, yields, and currencies, or rather the dollar covered. Let's look at commodities. This is also significant. So yesterday we saw commodities come down with the markets. So copper, you know, topped out over here. I did mention it was looking a bit toppy. Down we go. I expect us to go basically to 4, just under 4, you know, around 3.95. And then even lower, maybe, you know, just bounce off this ascending. Sometimes commodities will overdo it. Yeah, I mean, copper is also the sort of market barometer. So if the markets are going down, plus commodities are going down with the dollar and the yields, would make perfect sense to come all the way back down to here. So that's copper. Natural gas. This thing just won't stop. Oh, keep doing this. Won't stop going down. But yeah, no, yesterday was a pretty bad day. Today you see the new candle forming, but and I'm talking about Tuesday morning here, very early in Europe. But yeah, no, natural gas just won't break out of this descending line. And to be honest, if the dollar goes up and markets going down, natural gas might not be able to go up as it should. But you know, you've got to zoom out and get a perspective. For me, 2.5 is a zone. If you've already bought here, and I've actually added to my holding, I own a TRLEF, Trillium Energy. Very happy with my buy. I am not buying now again. I do think natural gas is a buy, generally speaking, right now, but maybe you can get it near 2.5, especially if the markets keep going down with the dollar going up. So, but I still think, like, you know, long term, just look at this. This is a buy, nice and simple. But still, you know, dollar up, market down will add pressure to it. Oil also going down for the same reason as the other two, you know, dollar up, market down, oil down, sort of general demand and sort of recession. You know, this is after China opening, so that catalyst is gone. I still think oil is a buy, long term speaking, but look at this. We sort of didn't have any continuation after this descending breakout. So for me, these two lines are perfect. Let's see if we can bounce off the ascending support. If not, we're going to start testing the old horizontal ones. So I don't like to draw them, but they are significant. I don't want to ruin the chart, but this wasn't good. This horizontal and then the old horizontal, these will all count on the way down. So there'll be quite a lot of areas of support on the way down. First the ascending, then the horizontal, then the final horizontal. And then actually looks like we've got this one here. I need to draw. I'm trying to replace my thin green lines with thicker white ones so people can see them more clearly. But yeah, this one will also come into play, definitely. So even if we breach this horizontal, lots of support for oil. That's what the point is. And on the way up, well, we just need to crack this, don't we? So these are the only lines really to consider. After that, it's just the horizontal ones this one horizontal one I've drawn. And that's it really for oil. We just have to follow the charts there. But yeah, definitely could come lower because market's going down and dollar going up. But a lot of support on the way down, in my opinion. And the thesis long term, fundamentally, geopolitically, is to sustain higher prices. Remember, they got to refill the strategic petroleum reserve, and that's going to be, people expect that to be around high 60s. So lots of support. Gold and silver. Finally, right? I've been saying it non-stop that we're putting in a bit of a head and shoulders, this being the shoulder, this being the big head. So we might not even get a big red shoulder, because if the dollar goes up more, if yields go up, if the markets come down, again, everything depends on the Fed, but so far we're setting up for a nice move down, and I'm looking for that crack of 1900. I mean, that would be really good if the Fed is able to drive down gold below 1900 with volume. Then we're definitely going to go to 1880, maybe even below, because that would be the perfect reason for gold to continue down. Now, having said that, I can guarantee you one thing, and that is just as the Fed announces, and even during the conference, you're going to see these swings both ways. I always see it. As soon as the market announces something, it just goes all the way up or all the way down, and then reverses sort of within 8 minutes later, and it's incredible. So you taking that out of the picture, I don't want to see a swing down all the way to 1885, and then a couple of minutes later we're back above 1910. That doesn't count as a move down. That could just be a beautiful hammer forming, and then we go back up. So I'm talking about the close on Wednesday. Where's gold by then? Because that's after the market's kind of digested what the Fed said. So, it's all about the close rather than where it goes intraday, because we've seen those wild swings. And even on the minute chart, you can see wild swings both direction. But gold looking bearish. I'm looking for 1900 to be breached, 1880 to be probably act as a little support, but even the ascending support I'm looking for. So if below 1880, I would love that. And then who knows, maybe even lower. You can also see silver here, lower highs daily. Yeah, same thing. So if gold goes down, we'll take out this sort of zone. And to be honest, this level here, the low it made on this day, had a nice bounce. That was kind of bullish. You can see 2 days after, it just kept going up. But silver, I'm looking for it to crack sort of 23, 22.8 zone and move lower with gold. So I think that could easily happen if, dollar up, yields up, commodities down. Finally, let's look at the miners. They followed gold. They've been following gold for ages. So that also closed at low of day, by the way. So today I expect, if we have a continuation, maybe low 31s for GDX. GDXJ, even weaker. That's nice to see. So normally GDXJ will be stronger in a bull market and weaker in I'm not going to say a bear market, but when the price action is bearish, and we're seeing that too. Close at low of day, very close to that sort of 38.5 low of this area. If we can take out 38.5, which I think we will today, we go straight to 37.5. And I think that's going to also put pressure on GDX, the more seniors. So I think We're going to go low in the minors. I've been waiting for this day. So I just don't want to miss it. What if we go down here and the Fed announcement causes bullish price action for the miners and the metals, and then bam, we go all the way back up to new highs. So should I be buying? I will. I will buy very lightly if that happens. If I see the miners come all the way back down to this area, so GDXJ here, 37.5, and GDX at 30. If I see it there before the Fed announces, I will buy a tiny bit just to buy back some of what I've sold all the way up here, just in case the Fed announcement proves bullish. If it doesn't, we come all the way back down even lower. Excellent. I'm going to have my machine gun sells buys waiting. But I just want to nibble something here just in case I'm wrong. Anyway, that'll do. One last thing, Bitcoin. That was interesting. It had a nice pop there just late weekend. Sunday, people got excited. And I thought, look, you're not allowed to go up without the markets. And then Monday, down we go. So that was a nice reversal. This also will come down, in my opinion. If the markets come down after the Fed announcement, this is coming down. And I'm talking about, this old resistance will become support. So 21,000-ish, let's say 21, just above 21,000. It'll probably hit 21,000 on the way down. It'll overshoot. And then the charts, then it's still kind of bullish, then it really depends. Do we go back up and break out of 24,000 or do we come all the way back down here? But Bitcoin will have pretty decent support on the way down, not just this level, 21,300-ish, but, above 18,000. And then the horizontal low here of sort of 15, 16,000. But I don't think we're going to be getting there soon, but we could definitely get here in the next 2 days. So anyway, in the end, it all depends on the Fed, but there was some interesting price action across the board Monday. So it's worth paying attention to. Good luck.